Welcome to the January 2025 real estate market update for condos and townhomes in Fort Lauderdale. My name is Casey Prindle, your Fort Lauderdale Realtor. If you've been thinking about buying or selling a condo or townhome in Fort Lauderdale, even a second home, give me a call. My phone number is 786-443-7203. You can text me at that number also. My email address is going to be below in the description. Whatever way you feel comfortable, get in contact with me. Today we're going to go through some of the data. Data typically runs 30 days behind. That's why, although we're in January, you're going to see December data. And I'm going to help answer the question, is the Fort Lauderdale real estate market headed for a crash? Specifically, condos and townhomes. Much different animal than single family homes. All right, you ready? Here we go. Median sold price, $450,000. Down from $532,500 this time last year. Now, if you've been watching me for some time, you know I really don't pay attention to median sold pricing. Sample size relatively small, 123 sales. I just think there's more meaningful statistics to look at. I also think this is an easy statistic to look at if you have, say, an area that was recently built. And in most of the housing stock is within the same year or years, where in Lauderdale, we don't have that, right? You have stuff that was built in the 50s mixed with stuff that was built in 2024, and it all gets lumped into the same median sold price number, whether it's against the beach, whether it's in downtown. It's just not a meaningful number to look at. So here you go. Look at it. Don't take too much from it. That's my honest opinion. So something you should pay attention to, total number of sales, right? Totally logical. I mean, what matters a whole lot more than the amount of buyers that are actually raising their hand and saying, yeah, I want to purchase at these levels. That much more meaningful statistic, right? That being said, look at this chart. We are definitely on the bottom half of it, right? So here's one of the surprises. If you've been listening to a lot of the media headlines that say doom and gloom, condo and townhome market in Florida, free falling, everything is in bad shape. Well, year over year, we're actually up. The chart kind of looks like we might be showing a little bit of life bouncing off the bottom of it, right? I'll go into more of this down the line, but there's a dichotomy that's happening. You know, there's a have and a have-nots when it comes to condos and townhomes right now. There are some well-run condos where all the assessments are already paid, all the work is already done, everything is up to date. Those are trading. There's some other stuff. They haven't addressed anything. The budget's a mess. Just not. And then you lump this together with townhomes, which don't have the same issues as condos have in terms of inspection reports and such. And look, we're putting it all together. Bottom line is, whatever product type people are looking at, there's some buyers that are coming to market. Not a ton, still on the bottom of the chart. But my point in illustrating this is, it's also not the doom and gloom, you can offer 50% of what a condo is worth. That's nonsense. That's just nonsense. All right, let's move on. Average list to sales price. So this is going to be the percentage properties are selling at relative to their original listing price, not reduced listing prices, their original listing price. So if something was listed at $100,000 and moved down to $96,000 and sold at $94 and change, that's why you're going to see the 94 number here. It's not just going to, if it was between the 96 and the 94, it would read 2%. This would be 98%, you follow? So remember that, original. Who's this good for? Who's this bad for? What does it say? Look, it's a good stat to watch. It shows you how much wiggle room there is in terms of negotiation if you're a buyer. Look at this, things are selling at 94%. If you call me up and say, I want to make offers across the board, 80% of listing price, I tell you, terrible strategy, not what the market's doing. Sellers, this tells you do have to be willing to negotiate if you want to get a deal done, right? Look back. If you think we're here, where 99% of listing price the seller was getting, we're not there. We're down here. And we've been trending down. Obviously, sellers would like us to be up here. Buyers would like us to be down here. So definitely something that's important to watch, something to keep an eye on. I do think it's interesting. So that's your takeaways there. Median days on market, before I go into that, if you're thinking about buying or selling a property in Fort Lauderdale, call, text, or email me. Honestly, easier to call or text me. But if you want to email me because you're shy, email address is below as well. Whether you think about buying or selling now or in the future, or you just want to talk about real estate, I talk about real estate all day long. That's what I like doing. So don't be shy. Reach out to me. Let's have a conversation. All right, days on market. Who are higher days on market good for, buyers or sellers? You said buyers, you win the prize. Median days on market is also inclusive of the time a property was active on the MLS. It does not include the amount of time that you were under inspections, financing contingencies, blah, blah, blah. So you have to add 30 to 45 days to this 60-day number, right? So it puts you closer to 90, 110 days is your true time from the time you put it on the market to the time you get money in the bank, if you're priced well and if you have a desirable property, et cetera, et cetera. I will be honest, I'm surprised that this market, or that this number pulled down. I think that we're probably going to have longer days on market in condos and townhomes. Look, for buyers, this means they're not going to see pressure. Look at this, take 64 days. If something came on the market and a buyer came to see your property, 2 months later, your property's still on the market. Do you think they're pressured to make a decision? Do you think that I can call them up and say, hey, if you like this property, we've got to write an offer today. I think somebody else is going to come take it. They saw 10 properties. 2 months later, all 10 properties are probably still on the market, right? Not a lot of pressure there. Sellers don't want to see this number high. Sellers want to see this number low, but this is the reality of the market that we're in. And again, I'm not going to be surprised if this pops back upwards. Just the market that we're in. Median price per square foot. Again, just like with median sold price, don't put a whole lot of stock in this. Just use this as an overall gauge. I've said it time and again. All this is really saying to me anyways, as we still sit on the top half of the chart, is that people want the nicer stuff. They pay up for the nicer stuff. They don't want all the junk. And again, this lumps everything together. This lumps downtown with the beach. Kind of a messy number to look at. Takeaway. If your property's in good condition, that's what a buyer's going to want. Buyer's probably going to pay more per square foot for the property that they want in the nice condition. All right. Total dollar volume. Again, lower sample size. We also have a market here in Lauderdale where there are some really expensive condos and townhomes. If you take those out, total dollar volume will plummet. That's how the median sales price is only $450,000, but the volume, still in the low half of the chart here, but there were some higher priced sales last month that kind of, in my opinion, artificially propped this number up again. That's why I don't want to spend a whole lot of time looking at it. I think you can just take away that, look, total market breadth, we're on the low side of the chart, no matter how you slice it. Of course, sellers would like to see volume way up. Unfortunately, not really the market that we're in all honesty. All right, again, if you're thinking of buying or selling a property in Fort Lauderdale, give me a call, 786-443-7203. Text me if you like, email me if you like. But again, if you want to talk about real estate, let's talk about real estate, man. That's what I like to do, especially if you like to talk about the statistics that I put out. It's a more interesting conversation to me than will my property sell for more money than the others because I have expensive drapes. That's not what I'm all about. All right, months of supply of inventory. I have said time and again, and I continue to say, if you want to figure out what kind of market health you're looking at, show me the supply numbers. That will tell me everything I need to know. This chart is ugly if you're a seller. Look, 12-month change, 55% more inventory. Translate that if you're a buyer. You have 55% more choices if you're a buyer than you did this time last year. This market's going to feel very different than a couple years ago when we were down here, less than 2 months of supply. We're now up, brushing up against almost a year of supply. Had to cut out there. Dog saw the FedEx man and had to alert the neighborhood he was around. All right. Look, we're brushing up against almost a year of supply. What that means is if the level of sales stays the same, it would take an 11.5-month period to eat through the available for sale inventory of condos and townhomes. That's a tremendous amount of supply. Now again, look at the chart. Have we been here before? We're back here in what, 2019, 2020? And I've said this to a bunch of people. I was transacting in those marketplaces. They weren't that bad. They were slower, sure. They looked a lot like this. All right, so is this a lot of doom and gloom? I was going to talk about this towards the end of the video, but let me just kind of lump it in here. One thing that is going to slow down price appreciation is going to be more supply coming to market, right? If you have more and more stuff for sale, buyers have more and more choices, but they also have a higher and higher likelihood that they will find a seller who will sell for less than their neighbor just sold for. That's how prices move down, right? Prices move up when supply is so constrained that buyers have to pay more than what their neighbor just sold for. So, can I see prices pulling back? I can. Do I think that they will crash? I think that's an overused word. I think that there's a whole lot of people with 3 and 4% interest rates who aren't all that distressed. They may not want that condo. They may not want that townhome. But if they have to go from the 3-4% rate that they have now to a 6 or 7% rate to move into a home, all of their payments double. Do you think that that seller is really rushing to get on market? I don't think so. Here's the person I do think, if you're considering selling. Look, if you're renting your property, your rental price is capped right now, in my opinion. They're really not moving up. We've run up so high, I don't think tenants can afford to pay anymore. Your expense line has gone up. Your HOA fees, inclusive of your insurance, and your property taxes have gone up. So your margin is getting thinner and thinner. So if you were holding a property because you were renting it and you think, well, even though I see the margin thinning down, maybe I'll hold this for a while longer. Let's have a conversation, because I don't think it's the best idea. Not everybody's situation. Again, that's why I want to talk to you, but it's probably not the best idea for you to hang on to that, strictly because if there is a 10-15% pullback in pricing, which I don't think is out of hand, I 100% can see that happening. And in some buildings, even more than that. Was it a better idea for you just to get rid of it? It's going to be a lot of soul searching for people, I think, in that position. And those are a lot of the sellers that I'm talking with. And again, a lot of sellers I talk to, we go through the math, and I just tell them, look, based on what you have, it's not a good time to sell. The math just doesn't work. But there are a lot of people where more and more that math is starting to work. So, look, that's what I got there, guys. Last thought is going to be on interest rates. I get a lot of phone calls and emails about what I think interest rates are going to do, what I think the Fed's going to do. Now remember, Fed and interest rates are not a one-for-one. The 10-year bond market doesn't necessarily care what the Fed is doing. Fed is an overnight rate. Do I think that the Fed's going to be in a rush to pull down rates? Probably not. Not unless the labor market breaks. If a ton of people start losing jobs and not getting rehired, that's when I think we'll see rates pull down. This whole date the rate, marry that, don't do that. Don't bank. Look, rates right now are within historical norms. To 6 to 7% is the historical norm. We're where we've always been. We were just way low. And a lot of people took advantage of that. I was one of them. But this isn't a market that just automatically you assume rates are coming back down to 3, 4, 5%. That wasn't normal. It just wasn't normal. All right. That's what I got, guys. Call me. Text me. Let's chat. I'll see you guys next month. As always, thanks for watching.